Welcome back. Now we'll look at where markets ended the week after consumer and wholesale prices came in much hotter than expected. Producer prices now at their highest level since September. Treasury Secretary Janet Yellen telling Fox Business this week that inflation's path lower may not be a smooth one. Joining me right now is former Atlanta Federal Reserve Bank President Dennis Lockhart. Dennis, great to have you. Thanks very much for being here. Your reaction to the hotter than expected inflation readings this week?
Well, you learn from being part of the Fed that you don't overreact to 1 month. It looks to me like some of the inflation numbers are going sideways a little bit, but I think the disinflation story continues intact, and I think that's the assumption of the Federal Reserve.
Well, I mean, look, you've got inflation continuing to be elevated, oil prices elevated, and growth slowing down. How do you see the rest of the year playing out in terms of the macro story?
Well, first, it's important not to conflate high prices with inflation. High prices are the result of previous inflation, and we have a number of prices that are high. You mentioned gasoline prices. My reading on that is that there could be seasonal factors at work in the last numbers we saw the last month, as well as the scheduled maintenance of refinery assets across the country. So again, I don't think we overreact to 1 month's numbers. This is a pretty solid economy. It's growing above the long-term trend. Employment is quite good, and I believe we continue to see disinflation. So I would say overall, I think it's a positive outlook for the year.
Meanwhile, household debt is at a record high. We're seeing a rise in credit card delinquencies. There's a report from Vanguard showing a record number of Americans are making early withdrawals from their 401ks. You've also got worries about buy now, pay later schemes, lots of credit card usage. Does any of this alarm you in terms of the macro story?
I think it's worth watching. It's not a good omen that people are tapping their retirement funds for current consumption. It reminds me of the period back in 2007, 2008, where people were using essentially the equity in their homes as an ATM. That's not a good sign, but I don't think it necessarily is the total story. So I would look at those developments sort of in the context of what is an overall positive picture.
An overall positive picture, even though inflation is elevated and you've got the economy indicating some slowdown from the peak. Dennis, do you expect that the Fed will be able to get inflation down to 2%? I spoke with Jim Grant this week, the founder of Grant's Interest Rate Observer, and he said, look, maybe the Fed will change its target. Maybe they'll realize you're not going to get to 2% anytime soon. Maybe they'll realize a cut is not in the cards. We need to be perhaps seeing an increase in interest rates. Your thoughts?
Yeah. Well, let's look at the total story. Inflation peaked at 9.1% in 2022. It's now running, according to the Fed's preferred measure, at about 2.8%. That's down substantially. I think there's a reasonable argument that we'll continue to see some progress as the economy comes into better balance.
So do you think the Fed cuts rates this year?
Well, the conventional wisdom is probably yes, sometime in the summer, starting in the summer. I think it's going to depend on the upcoming inflation reports and whether we see a sort of a continuation of this sideways drift in the inflation numbers. I think the Fed's default mode at the moment is to be patient and to proceed cautiously. Overall, I think rate cuts will be justified this year, but right now I'd say there's perhaps more doubts than there was a couple of months ago.
All right, we will leave it there. Dennis, great to see you. Thanks very much.